Proposition 5. Should the California Constitution be amended to increase the ability of certain homeowners to obtain tax relief by transferring their Proposition 13 related tax base to a replacement property? This is an initiative constitutional amendment, meaning that it would amend our Constitution and it's placed on the ballot by the gathering of signatures. The situation today. Taxes based on the value of real property provide a major revenue source for local governments, schools, and special districts. Such taxes equal a property's assessed value times the applicable tax rate. Proposition 13, as amended, limits property taxes by limiting both value and rates. The tax rate is capped at 1% of the assessed value, which can grow annually by no more than 2%. Reassessment to market value is required for newly purchased or newly constructed property, or if ownership changes. Exemptions from these reassessment triggers are allowed for homeowners over the age of 55 or who have a severe disability. They may transfer the assessed value of a prior home to a replacement residence of equal or lesser market value. The new home must have been purchased within 2 years of selling the prior home and can be located within the same county or another that permits inter-county transfers. This exemption can be used only once. What Proposition 5 would propose is that it would expand a homeowner's ability to transfer assessed value to a new home. The market value of the replacement home could be both greater or lesser than that of a prior home. The transferred value would be adjusted through the use of a formula. It would be increased if the new home is worth more, or decreased if it's worth less. An increased value would still be less than that based on the current market value. The house could be anywhere in California, and the homeowner is not limited to a single exemption. It could be used as many times as they wish. The new home still must be the owner's principal residence and be acquired within 2 years of the original home's sale. Proposition 5 also applies to situations in which the original property is damaged by a declared disaster or made unusable by contamination. The budget effect. Local governments for Prop 5 would have a net effect of reducing local revenue by about $100 million per year at first, growing to $1 billion over time. Increased sales would generate property transfer taxes of tens of millions of dollars, while county administrative costs would rise by tens of millions of dollars at first. For schools, the annual reduction in school revenue would begin at about $100 million and grow to $1 billion. Most school losses are expected to be offset by equivalent increases in state funding, however, and therefore would increase state spending by about the same amount. Those in favor say that older adults on fixed incomes need this protection, and that more houses will become available for younger families as seniors who are living in large homes move to smaller ones. Proposition 5 also protects Proposition 13 tax reductions, and the supporters are essentially the National and California Association of Realtors. Those against say that less money would go to schools and public services, and that loss of revenue will become worse every year, and that seniors already receive some Proposition 13 protection. The opponents that are listed are not listed with dollar amounts because there is no significant funding for an opposition to this initiative. Tax revenue from property tax is the most stable and in most states the largest source of revenue. In California, it is already a lesser percentage of their revenue than most states. This would, those against it say, exacerbate that situation. It does put more pressure on the state of California to therefore increase other taxes that are more volatile, such as income tax, sales tax, and gas tax, and the like.